Your house is not an asset. It is a liability.
For decades, we've been sold a dream: the white picket fence, the 30-year mortgage, the security of a deed. We're told that renting is throwing money away. But if you actually look at the math, the cold, hard, unrecoverable data, you'll realize that for millions of people, the American dream is actually a financial anchor. Today, we're going to dismantle the home ownership trap and show you why renting might be the smartest wealth-building move you ever make.
Let's start with the most dangerous lie: the idea that a mortgage payment is just forced savings. It's not. Most of what you pay every month never touches your equity. Financial experts use the 5% rule to determine the unrecoverable costs of owning a home. These are the costs that provide zero residual value, just like rent. First, you have property taxes, which usually hover around 1% of the home's value. Then maintenance, the unsexy stuff like roofs, HVACs, and plumbing. That averages another 1% per year. Finally, there's the cost of capital, the interest you pay the bank. Even at moderate rates, that's at least 3% of the home's value annually.
Add that up. 1% plus 1% plus 3% equals 5%. If you can rent a similar house for less than 5% of its market value per year, you're mathematically winning. In many major cities today, the price-to-rent ratio is so high that you're effectively shorting the housing market by renting. You are consuming housing services at a discount, while the owner takes on the risk of the foundation cracking or the market crashing.
But the biggest wealth killer isn't the taxes or the repairs, it's the opportunity cost. Let's say you buy a $500,000 home. You put 20% down. That's $100,000. Most people think of that as investing in their home. I think of it as burying $100,000 in a wall where it can't work for you. Historically, residential real estate appreciates at about 3% to 4% nominal growth, barely keeping pace with inflation. Meanwhile, the S&P 500 has averaged roughly 10% annually over the last 30 years.
Let's look at the actual performance. From 1995 to 2025, if you bought a medium-priced home for about $150,000, it might be worth $500,000 today. Sounds great, right? But if you had invested that same $150,000 into the S&P 500 instead, you wouldn't have a $500,000 house. You'd have a portfolio worth over $3.4 million. That is a $3 million gap. That is the price of the American dream. That is the wealth you traded for the privilege of mowing your own lawn.
Then there's the issue of liquidity and mobility. Your home is an anchor. In a rapidly changing economy, the ability to move for a better job is one of your greatest financial assets. If you get a job offer in another city with a $50,000 raise, a renter can pack up and leave in 30 days. A homeowner is trapped. They have to stage the house, find a buyer, and pay 6% to 10% in agent fees and closing costs. Those transaction costs alone can wipe out 5 years of accumulated equity in a single afternoon.
Don't get me wrong. Buying a home can be a great lifestyle choice. If you want to paint the walls purple or build a workshop, buy the house, but don't call it an investment. An investment is something that generates cash flow or compounds at a rate that beats the market. Your primary residence does neither. It's a consumption item. It's a very expensive way to buy shelter.
So what's the savvy move? It's called rent vesting. You rent where you want to live for the lifestyle and the flexibility, and you take the money you would have wasted on a down payment, property taxes, and maintenance, and you pour it into productive assets. You buy businesses. You buy index funds. You buy income-producing real estate where someone else pays the taxes and the repairs. You use the system instead of letting the system use you.
The goal isn't to own a pile of bricks. The goal is to own your time. And often, the quickest way to own your time is to stop working for a house and start making your money work for you. Shift your mindset. Stop following the crowd and start following the math. Build a life, not just a mortgage.
Follow for daily wealth-building wisdom.